Let me introduce myself. My name is Amanda Putri Gensti, Management Class 22 ANPM 22411 Empty 141. Tax subject. Tax subjects are parties subject to tax obligations by the tax authority. The subject of this tax can be an individual or entity that receives income and meets certain requirements. In general, tax subjects are grouped based on the following categories. Classification based on type of tax subject: personal tax subject, individual. This includes every individual who earns income, whether living within the country or abroad, but who has a source of income within the country. A person will be considered a domestic tax subject if he stays or is in a country for more than a certain time determined by tax regulations, for example, more than 183 days in a year. Corporate tax subjects, companies or entities. Corporate tax subjects include business entities or organizations that have a certain legal form, for example limited companies, firms, cooperatives, foundations or other nonprofit organizations that earn income. This entity can be domestic or foreign, but has a source of income in the country concerned. Undivided inheritance tax subject. Undivided inheritance may also be taxed as a separate tax subject, especially if the beneficiary has not determined individual ownership of the inherited assets. Other tax subjects. Included in this category are trusts, trusteeships, or special institutions created for specific purposes, such as trusts for minor children, trusts for charitable purposes, or professionally managed pension funds. Classification based on population status: domestic tax subjects, parties who are domiciled, have a permanent residence, or are in the country for a certain period of time, for example more than 183 days in one calendar year. Domestic tax subjects are subject to tax on their global income, worldwide income, namely all income earned both domestically and abroad. Foreign tax subjects, parties who do not live in the country or do not have a permanent residence in the country but obtain income from domestic sources. Foreign tax subjects are subject to tax only on income obtained from within the country, source-based taxation, without taking into account income from abroad. Tax obligations based on type of tax subject. Each tax subject has different tax obligations depending on their status. For example, domestic tax subjects are required to report all income from within and outside the country, while foreign tax subjects only report income obtained from domestic sources. This tax obligation will also affect the tax rights provided, such as the right to tax deduction or tax refund. Income tax object. Income tax object. The object of income tax is all forms of income that can be taxed in accordance with the provisions of the tax law. This income includes various sources, whether from business activities, investments, or other activities. Income tax objects basically refer to income earned by tax subjects and fall into the following categories. Categories of income that are tax objects: income from employment and business activities. This includes salaries, wages, honorarium, bonuses, commissions, and other income obtained from permanent work and freelance work. Apart from that, income from business activities such as trade, production, or services is also an object of tax. Income from investments and capital. Income generated from investments, for example dividends, interest, royalties, and rent on property, is subject to tax. This income is considered the return on capital or wealth owned by the taxpayer. Gains from the sale of assets, capital gains, if a taxpayer sells assets that have increased in value, for example property or shares, the profits from this transaction become taxable. Capital gains are one source of income that is often taxed at a different rate than ordinary income. Income from rental or leasing of assets. Income from leasing fixed assets, such as buildings, land, vehicles, or heavy equipment, is the object of income tax. Typically, this income is generated from the use of assets by other parties with payments in the form of rent. Other income. Other types of income that are included in the income tax object include prizes, awards, or income from sweepstakes. Sometimes, income from side activities or non-main activities can also be a tax object if it complies with the provisions of the law. As an individual domiciled in Indonesia, that person is subject to domestic tax, so he is subject to tax on all his income, both from Indonesia and abroad. Income received from
HELLP
work in
everyone.
Indonesia,
My
for
name is
example,
Amanda
salary
Putri
and bonuses,
Genesti.
as well as
I
income
will
from property
presentating
rented
about
abroad, are both
organizational
subject to
development
income
and
tax and must be
organizational
reported in
culture.
the annual tax return.
Organizational development and
SPT.
organizational
If income from
culture are
overseas
two
property
important
has been tax
aspects of
deducted in that
industrial
country,
psychology that
Indonesia
are
may
closely
provide tax
related.
relief with a tax credit to
Both play
avoid
a
double
role in
taxation.
enhancing organizational
On the other hand,
effectiveness and
if there is an
employee
expatriate
well-being.
who only lives in Indonesia
Here is a
for
further
100 days a
explanation
year
of these
but
two
earns income from his
concepts.
investments in Indonesia,
1.
he is
Organizational
considered a
development.
foreign tax subject and is only
Organizational
subject to tax
development
on
is a
income
systematic
originating from
effort to
Indonesia,
improve
for example,
organizational
income from
efficiency
dividends
and
or interest.
effectiveness through planned and directed changes. The focus is on changing structure, culture, and behavior in the workplace to improve performance and competitiveness. Key elements of organizational development include planned change. The change process is carried out with strategic steps, often through interventions involving improvements in systems, processes, or relationships between individuals within the organization. Employee involvement. Organizational development often involves the active participation of employees at various levels. This is important to create a sense of ownership and engagement in the change process.